and that's why I won't even be showing my face because I'm having this flu. That's crazy. Anyways, today we're going to be looking at chart patterns, and I want to try and help take your trading to the next level with very simple chart pattern strategies that could actually be very profitable if well used within a strategy. So most of the time we talk about so many other stuff, support, resistance, trends, all these things, but we never really touch so much on chart patterns and how they could be so effective to your trading. You just need to add them to your other strategies or other confirmations. So you won't be using chart patterns on their own, really, but you want to make sure that they're happening at significant price levels. You want to ensure that each time you looking at a chart pattern, it's giving you some sign that it is going to be at a significant price level. So, having said that, so this is TradingView. My normal trading platform is acting up, but I'm going to use this to just give you a bit of a view. So here we are on the GBP USD. We are trying to look at the possible chart patterns that could have given you money if you are trading this market. And this is the 1 hour chart, which is my favorite. You can do 2 hours, you can do 3 hours. Something about chart patterns is you want to find them or spot them in your trading time frame, but you also want to make sure that you have checked what could be happening on other time frames, because you could find that if you go to the daily time frame, there could be a pattern happening that will affect your trading if you take a trade on the 1 hour or 2 hours. So there are certain levels you might want to be aware of. So if it's forming a double top chart pattern on the daily and you take a long position on the 1 hour, chances are you need to be aware of that level where the chart pattern is forming on the daily, because that could be a resistance level. Further ado, so what you can do is very simple, right? So let's first have a very simple marker or a brush. So before I get into it, let me just show you what could happen. So what are chart patterns? Basically, when the market is moving, up and down as usual in normal cycles, it forms patterns and trends. These are the patterns we try and spot each time we are looking into technical analysis. We try to spot certain patterns that could be repeatable or repeated by the market, because most of the time people think the same way, buyers and sellers act the same way. People will always buy at certain points, sell at certain points. It means we have certain very strong price reaction points that we could use to change your trading. And once you get to determine those points do form a pattern, because what happens is that at some point the balance between the buyers and the sellers is quite well predictable. So you can tell, okay, at this point sellers are likely to come into the market, at this point buyers are likely to come to the market. So if you have a resistance level and a support level, right, and each time you know very well that once the market gets down here, it will have a support level. It gets up there, it will have a resistance level. Okay, like remember, always those are just zones, right? Not just a straight line, but a zone. So it could be right up here, certain level. That becomes a market. Very simple. So with chart patterns, you're looking at the fact that, oh, the market hit this level up here once, it came back and hit it the second time. This is likely to be a chart pattern. Why? Because it's going to form what we call a double top. A double top usually signifies a drop. It is a good sign, especially on an uptrend, whereby the market was going up, but at some point, the level of resistance becomes very strong and it hits the same level twice. Instead of hitting a new high that could be up here, it hits the same level twice. Sometimes it might be just a little bit higher, but most of the time it's the same level. If that happens, then you know that the pressure from the buyers is almost ending and the sellers are right to come into the market and push the market down. So what do? You want to find an entry point somewhere around here and move this market down. That's how it would happen. The same would happen if you're having a downtrending market that meets a support level, a certain level, and it meets it twice or 3 times at the same level. What happens? It shows you that the strength of the sellers is now ending, and you want to find an entry point when the buyers are coming back into the market to drive the prices up. So it's basically what you're doing is you are looking at the pressure that the buyers or the sellers have and how long that pressure has been going on, and you want to make sure that when that pressure is depleted or when they get tired, you start now looking for entry points to the opposite direction. usually it's a signifier of the market trend changing. So if it was an uptrend, you are looking at the exhaustion of the buyers. If it was a downtrend, you are looking at the exhaustion of the sellers, right? And therefore, you're looking for entry points of where the buyers or the sellers could be coming in. Now, with regards to, let's remove this first. Now, if you get back to the market here, and you do what we call zooming in or zooming out in this case, sorry, you zoom out and then you want to find your significant price reaction point. So you want to find those resistance and support levels first, because those are the points that will help you identify if you actually do have any chart patterns, because you can only identify chart patterns once you have a very clear points of price reaction. And those points are not straight lines. Remember, they are zones, they are areas. So it's not like the market respects a very straight line, as long as it can mark for you a zone in which there is likely to be a price reaction. That is just enough. So you always want to make sure that, oh, you mark those points really well, and you know what you're looking at in terms of like which areas is the market likely to touch on before it reacts. So what are some of those levels that you're looking at the market and you're thinking, okay, if it gets to this area, what is likely to happen is that it is likely to react in a certain way. Now, for instance, if you come to this chart, you can see a very clear point of reaction. So you could see, if we expand this, you could see very clearly that the market has reacted at different points in here. So you can see that, oh, the market got to this level and not once and reacted. The market got to this level, not once it reacted. The market got to like this level, the third time it reacted. So that's more like a triple bottom. And even if you wanted to say a quadruple or whatever, you still got the gist, right? So this is just one of the chart patterns. This is just one of the common chart patterns you could find. You can find a double top, you can find a double bottom, you could find a triple top, you could find a triple bottom, and most of the time we say that the more times it hits a certain level like it does here, the stronger and more significant that level is. So that way you can even end up with a quadruple bottom or quadruple top. I don't know how to call it, but yeah. So you get the gist basically. You just need to find those chart patterns, and once you see the chart pattern, you are free now to look for entry points, especially if the chart patterns are happening with confluence with your trend. What is the trend that you chose in the beginning? And apart from the trend, is happening at a significant price point. So don't just look for chart patterns everywhere. Don't just go spotting them and trying to find them wherever. You want to look for them in the right places. I always insist on that. Look for the signs you want in trading in the right places. So once again, see that even if you are looking at the uptrend in that case, but this was more like a sideways market, so it was very easy to trade. So you can see that very clearly. It has a very nicely double top there. What happens the next time it hits that level? It dropped completely. It dropped completely. And it even came back again at some point around the same zone and then dropped again. Whichever way you're looking at it, you're still good to go. So we have double tops, double bottoms, triple bottoms. We also have what we call head and shoulder. Head and shoulder is more like the middle one will be a little bit higher than the rest. So if you had a chart pattern that's a head and shoulder, it could be coming up. The market was coming up. It hits a certain resistance level. Then it bounces down, goes down, then comes back again to that level and gives you a fake breakout, drops down again. Then when it comes back again, it comes back to this same resistance level without breaking out, and then it drops. That's what we call a head and shoulder. So we call this one as the shoulders, and that becomes the head. These chart patterns are also very common. Again, it could just be a head and shoulder. It could also be inverted, whereby it's a downtrend. The same thing could be happening. It was going down. It hits the resistance level first, just to bounce back, goes down and gives you a fake breakout of that support level, and then it goes back up again, and then before it comes back to hit the same support level, then it will rise. It's a reversal sign that the market is about to reverse into a different direction. So you want to make sure each time you're trading, you're busy looking at what are more confirmations that could help you trade better and easier and with more confidence. So if someone was looking at this chart earlier, you could actually see that, oh, there was some level of head and shoulder here. So there was an inverted one in a downtrending market. And you can see very clearly that there's very nice head and shoulder there. Market comes down, goes back up. like that, and gives you this nice strong level here. Again, very nice, and that's on the 1 hour chart. Very easy. Okay, so we go back. So almost the same thing. If you come here to this chart on the latest trades, this is basically, you know, yesterday, Thursday and Friday when I'm doing this video, you can see the same thing. You can see a very strong resistance level around here. You can see that the chart has gone up, the market has gone up around this level more than once. It gone the second time up here, it gone the third time around here, and after that it drops, right? This was money for me, this was money for me, clean money without any issue, and it dropped to a very clear level again down there, very clear level. So you can even see this a very simple, just today, yesterday and today, the chart pattern was very clear. So it doesn't matter when the chart patterns are forming, the fact is you can see a very clear chart pattern that shows you that the market is about to reverse. So this was today, clear triple top for me, and then clear support area where you know where you're taking your money. So if you're getting in here, you know how many pips you're trying to make when you're coming down to that level. It was a very clear win, very clear, easy trade. It can be very easy if you know exactly what you're doing in trading. Very simple. Sometimes you might think that it's gambling, but it's not, especially if you get to learn how to read charts, you get to learn how to study these patterns, and you get to use the simple things in trading. Don't complicate it. Don't overcomplicate trading. That's why people who succeed in trading are not overly educated people. They are more like easy people. They look at what they see in front of them and they don't overanalyze stuff. Okay? So don't have what we call paralysis of analysis. Get to the market, look at the possibilities of chart patterns, trends, support and resistance areas, candlesticks, patterns, and types, and then get into the market. Don't overanalyze it. So anyway, that was a quick lesson on using chart patterns. Like I said, there are triple tops, there are triple bottoms, there are double tops, there are double bottoms, there are wedges, there are triangles, there are rectangles. There are many chart patterns, but you want to start with very simple ones. Start with double tops, double bottoms, triple tops, triple bottoms, head and shoulders on an uptrend and a downtrend inverted. So that alone will change your trading in many ways if you can spot them as part of your other strategy. As part of your other strategy. I hope that makes sense. And that was a brief lesson on just making your trading much better. And feel free to reach out to Ken's Money Matters. Subscribe, share. Let me know if you have any questions, and I'll try to answer them. Thank you, and see you next time.